All right. Good to have everybody here. My name is Mayan Burton with Burton Realty Group, and today we're going to be speaking with Ric Rogers, who is a mortgage broker for Greenstreet Mortgage here in Sandy, South Jordan. You're right on the border there.
Our office is technically in Mill Creek, but in Salt Lake, it all just kind of blends together.
Yeah.
So we've got an office in South Jordan, we've got an office in Mill Creek, but our head office for Greenstreet's in Mill Creek.
It's good to have you. Looking forward to having this conversation. We've talked a little bit about, what's going on in the mortgage market and how that is affecting real estate, and how real estate is affecting mortgages, and how all this virus stuff is causing a little bit of chaos with everything. And thought we would have you on to talk a little bit about that, what's happening right now with rates and the processes and what lenders are experiencing, so that buyers, as they're looking for homes, can have a little bit better understanding of what's going on, and for sellers to understand what's going on, and from the buyer side, how that's going to impact them in trying to sell their homes. So let's jump right into this. What is going on with rates? We hear a lot about I just heard a radio ad this morning, I think it was, that rates are historically low threes, and that everybody should be refinancing or purchasing a home because their rates are so low. So true, not true? What's going on your end?
It depends on the day. It's a very interesting market that we're dealing with right now when it comes to interest rates. So, and maybe I'm a big on educating my clients and getting them kind of inside scoop on what's going on and why things are the way they are.
Sure.
So a little bit of background on that. Mortgage-backed securities are what mortgage interest rates are based on traditionally. They're one of the biggest pieces of the puzzle.
So tell us, what is a mortgage-backed security? I mean, that's a nice big word, but what does that mean? What is that? What are we looking at?
Thanks for catching me on that. I kind of get caught up with mortgage lingo sometimes. So what I'm going to do is I'm going to pull up a screen here that actually shows we track the trading of mortgage-backed securities live, and that allows us to see what's happening with the market, because there's a lag between where mortgage-backed securities trade and where lenders price their interest rates. So what a mortgage-backed security essentially is banks have a limited amount of money, a limited amount of capital. I know we think that they tend to be the big players in the room and that they have unlimited funds, but the reality is the biggest asset in the U.S. is housing. It's bigger than the stock market, right? And so if you're going to have a vehicle to fund people buying houses, it has to be huge. And banks just don't have that kind of capital. So what a bank will do is a lender will go and they'll loan you $200,000, $300,000, $400,000 for you to buy a house. And then what they're going to do is they're going to turn around and bundle those loans and sell them to investors. So what we have here is this is what mortgage-backed securities trade at, and we get feedback on up to the second on where things are trading. But what happens is your lender is going to take their loan and it's going to be bundled up as a bond with hundreds of other loans, as long as they follow the guidelines set by Fannie Mae, Freddie Mac, or Ginnie Mae. Some of these names that people may have heard but don't understand really what they do. They essentially set the guidelines for being able to take a loan and bundle it and resell it on this mortgage-backed security market. So what a lot of people have found is, in 2008, we actually had a breakdown in the economy that was caused by mortgage-backed securities that weren't underwritten, or the loans that were being sold as mortgage-backed securities weren't underwritten with very strict guidelines. And so what we really have right now is that's not the case. Loans are being underwritten with very, very strict guidelines. We'll get to that in just a minute. But what's happening is banks are writing loans and then they're selling them on the secondary market as mortgage-backed securities. And so whatever those are selling for typically have a huge impact on where interest rates come in. And so right now, mortgage-backed securities are trading at all-time best levels, which means we should be seeing the absolute best interest rates we've ever seen in your lifetime, in my lifetime, even our parents' lifetime. But the reality is that's only one piece to the puzzle, and some of the other pieces are really being affected a lot by not just what's happening with the coronavirus, but actually some of the actions that's been taken by the federal government to try and combat the economic slowdown that we're seeing for a lot of individuals.
So when we hear that the Fed is going to lower interest rates, that's not necessarily a direct impact then on mortgage rates, is what you're saying.
Yeah, no, the Fed lowering interest rates is what a short-term money that the bank can get. So banks basically need liquidity, not just for mortgages, right, which is backed by the mortgage-backed security market. That's where they get liquidity for that. But they need liquidity for car loans and home improvement loans and home equity lines of credit.
Sure.
And hey, we just have a bunch of people taking withdrawals out right now, and we need capital. So the federal funds rate is what banks can basically borrow money from each other or from the Federal Reserve at. And so banks have liquidity right now. Well, that's the good thing. One of the hard parts with pinning down interest rates is, and I know we're going to dive into this a little bit more, so we're just going to jump into it. The loan servicers. So there's a lender who's going to lend you the money. Then they're going to sell and get more money from an investor on mortgage-backed security. But then there's the loan servicing part of it, right? So you make your house payment every single month to a loan servicer, and they take principal and interest and they send it to the mortgage-backed security investor, right? And they have to send that money whether or not you make your house payment, right? And so if you're a loan servicer and you're buying these loans, you're basically making a little bit every single month, just a small spread on the difference between your house payment, what you're paying as the individual, and what has to be paid to these investors. The challenge is they have to make those payments even if you don't. And if you take up the government's forbearance guidance that they've basically given, saying anybody can get a forbearance and not make their house payment, regardless of what's happening in your finances, or without proving anything that's going on in your finances, then these loan servicers are basically set in a position where they still have to send this money out.
Yeah.
And so if they're buying new loans, they have a hard time determining, is this person actually going to make their payment, or are they going to get a loan and then take in the government's, incentive, not incentive,
Okay.
but the guidance on not making house payments. And so
So
pricing that in is really what's causing a real chaos in mortgage interest rates. And I've seen interest rates in the last 2 weeks at 3.125% or 3.25%. And I've seen interest rates with the same banks for the same borrowers over 4%, because they're really trying to pin down, how do we value the servicing part of these loans and how can we sell the servicing?
got it.
And it's a really interesting scenario.
So what are banks then doing with rates and fees and stuff, trying to figure out what that rate actually should be for a buyer? What does that look like when a buyer comes in and says, hey, I want to get a loan, or I want to refi my current loan? What does that look like when you take that to the market?
So basically, and this is one of the things we educate our clients on, the bank's looking for three things. They're looking for your credit score. That's an easy one to quantify. Your capacity, your ability to make the house payment, and then the collateral or the loan to value, how much they're lending you based upon the value of the home or the value of the purchase contract. And so what we're really seeing right now is they're taking things that are outside of the box and they're just getting rid of them because they just don't have the time or the ability to value those things. So we've seen major lenders like Wells Fargo. On the brokerage side, we deal with a huge company called United Wholesale Mortgage, the biggest wholesale lender in the country, and they've also closed down their jumbo lines. So no one's lending on jumbo right now. If you have really low credit scores, you're going to have a hard time, if not an impossible time, being able to get a loan, because that's one more risk or red flag that the lenders are looking at, saying, hey, listen, if they've already got a low credit score, are they more than likely to go into forbearance much sooner than somebody else?
Okay.
And so
low credit score, define what that really means.
Well, so it depends.
Mm-hmm.
I love the answer. It depends, right? So
Yeah.
For FHA, we used to be able to lend all the way down to a 580 credit score. FHA actually has a guideline that you can manually underwrite if you don't have a credit score. Banks aren't touching those right now. There may be a few that are out there, but for the majority of people and the majority of banks and the amount of loans that are being done out there, it's basically none. And so if you don't have a 680 credit score, it's going to be very, very difficult to get something done unless, and this is the key factor, unless you have a lot of equity or other mitigating factors.
So you said a 680 credit score is kind of where you're at. Even for FHA, you need to be 680 and above?
You're just seeing huge swings in pricing. So Right now, a lot of the banks are pricing out loans for FHA, and they're usually much better than conventional pricing. But FHA is taking a huge hit on people that are going into forbearance, and people just start wanting to service FHA loans because of that. And
Yeah.
so we're seeing interest rates in FHA shoot through the roof. I've got some lenders that are basically pricing it to the point where they're saying, we don't want to touch these right now. Until things settle down, we're
Sure.
not touching these. And so FHA loans, which they'll still technically do at lower credit scores than that, they've just priced themselves to the point that they're essentially saying we don't want them.
Yeah. All right. So we're seeing a tightening of guidelines then from what the banks and lenders are wanting on loan qualifications.
Definitely a tightening of guidelines, and banks are really, if you thought it was interesting before, and banks double checking, making sure that the information that you provided them was accurate with documentation. We're seeing even more than that happening. I mean, nationally, we're seeing unemployment just skyrocket. We're seeing unemployment rates go through the roof much faster now than we did back in 2008, as far as the number of people that are going on every single week and filing for unemployment. We've hit some records there. So one of the things that lenders are doing to combat this and make sure that they're issuing good loans, that they're not going to be a source of additional economic struggles by giving loans to people who then aren't going to be able to pay them back, and having the system collapse, as a whole. They're literally calling the day that we're signing paperwork and saying, hey, is this person still employed? They're calling employers the day of for some of these lenders. Not all of them are doing that, because the other challenge you have is if people are working remotely and they're don't have normal systems in place, how do you get a hold of someone that day and make sure that they're working?
Yeah. I've heard too some issues with locking the rates. When a buyer comes in or somebody wants to refi, tell us a little bit about what's going on with rate locking and what lenders are having us do now with those issues.
With all the volatility, and this is where I'm going to kind of be my nerdy self and jump back to this little chart here, because there's one piece of information, if we look at it, that really is going to give some guidance there. So this is what mortgage-backed securities are doing just in the last 2 days. This is the last 5 days, and that looks like a pretty good chart. By the way, if mortgage-backed securities are going up in price, that means interest rates should be coming down, right? Okay. This is what's going on in the last month. And we've seen big swings, and you really can't tell how big those swings are until we get to what we call a candlestick chart. What this candlestick chart represents is each of those green lines or red lines represents the trading range for mortgage-backed security on any given day. So we pull up the last 3 months, which is what this period represents. During the time that coronavirus really started hitting the US, we have seen more volatility in one day, more movement in mortgage-backed security rates in one day than we saw in the previous 6 months as a whole.
Wow.
So it moved more in one day than it moved the previous 6 months. And so what we really had is we have a lot of lenders, and people don't like uncertainty. They don't like volatility. And so what we had is a lot of lenders that back here, they'd say, hey, we know kind of where the trend is going. We can see where things are at, and we'll let you lock in your loan with as much as just a name, an address, and a social security number. We could lock the loan for a client with just that information. But once we got into those volatile periods where things were moving that much in such a short period of time, lenders then they're accepting that risk for a 30-day time period, a 45-day time period. And if it's moving that much in one day, how do they take on the risk of what it could be in 30 days or 45 days? And so we're actually seeing a lot of lenders who are the most aggressive in their pricing. The way they're staying aggressive in their pricing is by not allowing people to lock until they actually have a loan that's approved. So not just a name, address, and social security number, but do they have all the documents? Have they reviewed them? Has an underwriter signed off of them? Are they cleared to be able to close the loan? And then they'll let us lock the loan. The good news on that is the locks are a much shorter period of time, which costs less. And so it's an even better interest rate compared to what's in the market at that moment. However, they're basically sharing some of that risk back with the borrower as far as what's going to happen with the interest rate as a whole. So one of the things I keep trying to emphasize to people is, hey, we're all in this together, right? Some people are going to look for a way to take an advantage of what's going on right now in the market. And there will be opportunities presented with a unique situation like this. However, for the majority of people, we just need to realize that we're all in this together and we're all going to assume some risk together. So if you're going out to get a loan, you may not be able to have your interest rate locked right now until your loan's good to go.
When you say loan is good to go, does that mean clear to close, like the very end, right before closing, or is that through initial underwriting, conditionally approved, appraisal ordered? What does that really mean?
It depends on the lender.
Okay.
So we work as a broker, which means we're working with some of the biggest, most aggressively priced lenders in the country, as well as some smaller local ones. And every lender has their own guidelines on how they're trying to combat this to make sure that they are not only writing good loans, but doing so in a way that they're going to be able to stay in business. If they do have some of the people who take out loans that have to go on forbearance because they do lose the job.
Sure.
Right? These aren't people who are looking at saying, hey, listen, no one can go on forbearance. We can't allow that to happen. There's a reason for forbearance. But if people who have jobs, have paychecks, and everybody just said, hey, we're as a country, everybody right now, if they really wanted to, could say, we're not making mortgage payments for 12 months. But the chaos that will cause and the amount of permanent long-term damage is going to be huge. And so lenders are trying to hedge against that the best they can. And one of the best ways to do it is saying, listen, we're all in this together. We're going to accept some of that risk once we've written a loan, but we need you as the borrower to accept some of that risk as we go through the process. And once we're clear to close, that's the most aggressive policy that we've got. But it's with the lender who's giving us the most aggressive pricing right now. Is they're saying, as soon as you're clear to close, which we've seen everything, we're signed off, we're ready to go to the closing table either the next day or within 3 days, we will then allow you to lock your loan. And so that's an aggressive policy. It shares some of that risk, but the borrower is also getting the benefit of better pricing by accepting some of that risk on their own.
So there's a little bit of a trade-off there then. A little more uncertainty for the buyer as far as what the rate's going to be. Are they going to be able to, delay maybe closing? I mean, obviously they got to work that out with maybe their seller, or, trying to adjust so they can get the absolute best rate during that window that they have. I mean, how long will the lenders give you a window of, here's where you can lock your rate after it's clear to close?
Well, we've got, on purchases are a little bit different than refinances.
Sure.
So if people want to refinance right now, we're telling them, hey, let's get your loan underwritten, and then we can kind of wait and float it out. Because we are seeing some great pricing at certain banks in certain windows with certain programs. However, for people who are dealing with purchases, if you really want to just lock in and say, hey, I know what my interest rate is, we do have lenders that allow us to lock the loan once they have an initial package.
Okay.
But the pricing that we're seeing on those loans just is not as aggressive because they're accepting a huge amount of risk
Sure.
above and beyond what other lenders are accepting who have different locking.
So if a buyer wants to get the absolute best rate, they're going to have to accept a little bit more volatility and risk on their side, and they may or may not get exactly what they want.
And it's, we talk, there's a lot of talk of risk reward, right?
Yeah.
If you're willing to take a little bit more risk, then the reward that you're seeing is a little bit higher. And we usually don't see that when we're talking about mortgage locks and interest rates as far as risk reward.
Yeah.
But that's part of what people are doing to kind of hedge against the volatility and those huge swings that we're seeing right now.
Okay. Excellent. What about another issue that maybe we're going to run into, appraisals?
Yeah.
What are you seeing with appraisals?
Yeah. That's honestly one of the easier questions to answer in all this. So there are legitimate concerns for some sellers who maybe don't want to have an appraiser in their home because they're in a more vulnerable population when it comes to their health or when it comes to their age.
Sure.
And so what we're seeing is lenders are being more open with, and Fannie Mae, Freddie Mac are actually being more open with either giving us full-on waivers of appraisals for certain transactions where there's big enough down payments or other mitigating factors, or they're allowing just drive-by appraisals, which means the appraiser is still going to do all the legwork on finding comparables, but you're not going to see the pretty pictures that are up to date going from room to room to room. They're going to drive by, look at the neighborhood, look at the exterior of the house, and then do the comparables from there. So that's an easier one to answer. We are seeing for full appraisals a delay in how long it's taking appraisers to get out there to a property, or what they're doing is they're doing batches, right? So you'll have an appraiser that'll go out and do a bunch of inspections in a day. where he's got a box of masks and gloves, right, going
Yeah.
from home to home to home. And then they'll sit at their home for 2, 3, 4 days and knock out all the reports. So we're seeing, inspections that normally will be done on a Tuesday and an appraisal is done on a Wednesday. We'll see an inspection that's done on a Tuesday and it's not complete and back to us for a week because they're out there doing blocks of appraisals.
So it could take a little longer to get that appraisal depending on the situation.
Yeah,
What's
it can,
going on
but that's an easy one to manage.
Okay. I've heard this or saw some guidelines come down that they're reducing for self-employed people. They're reducing the amount of income that they're able to claim in the qualification phase. Tell us any insight on that.
So we're actually seeing some lenders that are saying, listen, we want to document that you have the ability. It goes back to those 3 C's, right? Credit, capacity, and collateral. So that capacity, that ability to make your payment is really based on your income. And so we're seeing some lenders change their guidelines for self-employed individuals that they essentially say, show us your tax returns, show us your year-to-date, show us your deposits from the past 30 days that show that you're still on track with that. And even if you're able to do that, we've had some lenders come back and say, we're going to take a 25% reduction on how we calculate income, unless you can show us you have a year's worth of house payments set aside somewhere as reserves. And so it's really an interesting scenario in that we've actually got loans that are in process where we've already submitted under one set of guidelines and they're changing. It's a moving target, which as a broker, it's very, very difficult for us to deal with because we have to be the bearer of those, changes as they happen, and just, keep our fingers crossed that the numbers still work out for those clients. But it's the way that the banks are trying to hedge, preventing those forbearance and those bad loans from biting them and biting us as a whole, who are all in this together.
So then let's talk just real briefly about forbearance, what that really means. I know we've heard a lot of hype in the media, especially here in Utah. They had a whole thing about, for renters that the rent could be it came across almost as forgiven for the month of, April, May, which isn't true, or deferred, which again is kind of not true. What does that forbearance really mean for somebody who wants to take a forbearance on their mortgage and not make that payment either because they're impacted by the virus or lost a job or whatever might happen? What does that really mean for them long term?
A forbearance, first of all, is not forgiveness, right? Let's start there. A forbearance, essentially, in a traditional sense, forbearance has been around for a long time, right? You can go through a hardship and basically approach your lender and say, listen, I've lost a job, I've got this going on, we're dealing with some health or medical issues, and we're not going to be able to make a payment. And lenders traditionally would allow you to document that hardship, show that you actually had a legitimate financial need, and then allow you to miss payments without them foreclosing on you. Now, those payments were just that. They were missed payments, which means at the end of the forbearance, there was some kind of a repayment of that. The bank is going to get every single dollar of principal and interest. They're just deferring those things, and that interest is compounding, right? And so a lot of these things means when a forbearance is done, which with the CARES Act, they're basically saying you can miss 360 days worth of payments or have a forbearance, for 360 days worth of payments. However, they don't clarify what that end game is, which means we're actually seeing with some individuals, we're seeing that as soon as a forbearance is done or forbearance is calculated, they're saying, okay, at the end of 12 months, you owe 12 months worth of house payments, right? And then you have to go through the process potentially of working out, well, how do we pay for that? How do I pay for $15,000, $20,000 in one lump if I couldn't make the house payment from month to month? And so for people who legitimately need it, it's there and it's a resource and it's going to help them to know that they can stay in their homes without losing their home, right? But for people who are having income, it's kicking a can down the road that's actually just hurting them and hurting everybody if they're taking advantage of that, because they have to pay all of that interest back, all of that principal back. They're going to have to pay interest on the interest and principal that they missed, right? That's compounding. And so if you have a paycheck and you're doing okay financially and all of this, make your house payment, because it's going to cause you more harm than you think it will if you're taking advantage of it. Now, for those who legitimately have a need and can't make that house payment, it's going to give them the comfort to know, hey, in all of this, I'm not going to lose my house, right?
Work it out.
But you're going to have a hard road of not only catching up on those payments and dealing with the lender at that time, 12 months from now, negotiating, well, I can make a little bit extra payment, or I might have to go through a loan modification to put that principal and interest payment on the back side of my loan and extend out the loan. But if you've gone through a loan modification process, it's not easy, it's not simple, it's painful, and it has a negative repercussion on your ability to get loans in the future. So you're not going to be able to get a mortgage if you're currently in forbearance. If you have not caught up all of your payments, you can't get another loan, right? And which means if we do see a decrease in interest rates even further from where we're at right now, when they get these servicing issues and the value of loans when they're selling on the market get settled out, I think we're going to see an even better interest rate environment than we've got right now, in terms of what more clients or mortgage holders are going to be able to get loans at. And if you've taken the forbearance option, you're just going to miss the boat, which means it could have a huge negative impact on you for a long time.
So bottom line then is make your payment if you can, as you normally made your payments. Don't take the forbearance unless you absolutely need to. And this isn't just for mortgages. I mean, there's a big thing about the forbearances for student loans right now as well. Same thing applies. I was looking at my student loan account this morning, and my next payment's not due until November, but I got a huge, because it's forbearance of 6 months, there's a huge balloon payment that's due November 1st. So I'm planning to make my student loan payments as scheduled to avoid that same issue. So it's not just mortgages, it's any loan that you take forbearance on. That's what it means. You're going to have a balloon payment, or you're going to make a higher monthly payment down the road.
Yeah, and I think that's really what it comes down to is if you're doing well financially, don't try and work the system, as it were, right?
Yeah.
Because eventually, if you don't need that, it's going to bite you in some way. Some ways that we can project and kind of know about, and some ways that we just don't. In that if everyone went and thought about it that way, that it's going to have a big negative impact on the economy as a whole,
Sure.
on student loan servicers, mortgage servicers, and we're going to see that spread and proliferate and make this short economic dip that we're seeing, and extend it much
Right.
further, much broader than it could be.
Yeah. All right. So all that being said, with what's going on right now, here's the big question: is right now still a good time to be buying a home?
From a loan and interest rate standpoint, yes, there's still some great deals to be had. That's just where you're going to want to spend some more time with a lender, a broker up front to get that. But as far as the market goes, that's kind of your expertise. So
Yeah.
What are you seeing on the real estate side?
So we've definitely seen a lot fewer showings, I think, on most properties. There's still properties being sold every day, and we're still seeing properties go under contract. We did see a number of homes that were under contract, and then the buyers failed or canceled for whatever it might be, whether they lost a job or couldn't get the financing. Things had changed that way. We're seeing some homes come back on the market. But what I really think we're seeing is that most people are waiting to see what happens with all the virus stuff and how that's going to impact them, whether it's job or just economy in general. And so there's still people that need to sell and want to sell, and there's still people that need to buy and want to buy. And so there's still demand out there for homes. Right now might be a great time to buy some because you're not having to compete with as many people as we were 12 months ago at the same period of time in the spring. This is usually
Right.
the hottest real estate time right now. And we're not seeing that activity that we were before. So homes are staying on the market a little longer. And I think from a seller's perspective, we're seeing two different types of sellers. We're starting to see people that may not be desperate to sell. They want to sell, but they're willing to be patient and get their price on their home. And they're not willing to take a discount right now. We're also seeing other people who have to sell and so are more motivated to sell, and they're going to take a discount on their house because they have to get it sold. And so for somebody who's wanting a great deal, this might be one of the best times that we've seen in the last 2 to 3 years to actually buy a home, because you're actually have an opportunity to find a seller who might be more desperate and is willing to take less than they would have had all this not been going on right now.
So a
And
lot
so
more negotiation power for those who are out there buying right now.
yeah, it's been a seller's market for months, a couple of years even. Last real buyer market that we had was the 2008 recession, 2008, 9, 10, 11, 12. I mean, there's a lot more buyer power there for buyers to negotiate. We haven't seen that for a couple of years. And for those who were waiting for this to occur, it's here. But I don't see this as a long-term collapse of the real estate market, because the underlying conditions that have led to this were not real estate related. They're all the health and virus related stuff, which we could have an impact, but I don't think is going to be a long-term drop in values. We still have a ton of people here in Utah that are looking for homes and have came here for jobs, and as those jobs are open back up, as the economy is open back up, those jobs will still be here and those companies will still be here, and there's still going to be a demand for homes for people to live. So great time to be buying, absolutely. If you're the type of buyer who has a solid job, has good credit and good down payment, you have a lot of negotiating power with sellers right now, and have an opportunity to get into a home for less than you would have earlier this year even.
Yeah, I think that the thing that a lot of people are skipping in a lot of this is, they hear all the bad news, but there's a lot of good news with the economy as a whole going into this. This isn't the same thing we faced in 2008.
No,
There were higher savings rate, more liquidity. As a country, economically, people were much more conservative because of the issues that they faced back then, and so in much better position to weather this and to have this be a short temporary thing, as long as people are being responsible and not piling onto the problem.
Yeah, and there's things you want to do when you go out and you look at a home. You might have your agent, find the virtual tours. We're seeing a lot more virtual tours of homes going up right now, so people can get a pretty good idea of what the home is like before they ever see it in person. You might have your agent preview the home for you and actually go out by himself or herself and walk through the house, and maybe do a video call with you as they walk through the house, and help you not have to worry about going out and contaminating homes, spreading the virus. Agents are able to go out and still look at homes and preview homes. There are some sellers who don't want people in the house, and there's some things you got to work out there. So it's a little more complicated as far as getting in to homes right now, but there's still a lot of homes you can go see. And if you really want to buy a home, if you're really anxious to get a good deal, you can make that happen right now. You can negotiate a lot more than you could have 2 months ago, and you have opportunities to take advantage of the market that we're in right now. So as a buyer, you should be on it. If you're anxious or interested in buying a home, now's a great time to be buying.
There's good news to be found. There's always a silver lining in everything that we're facing, and I think staying positive and looking for those, and being patient. That's another thing, is we're all in this together, and so just understand that everyone's doing their best on all fronts, and be a little bit more patient than maybe you would otherwise.
Sure. And I think one of the things to think about too is that as things do open back up, it could very easily cause a flood of buyers to come right back out into the market that you're not competing with right now. And so you have an advantage right now if you're looking to beat the rush, essentially, that could happen and probably will happen as the markets are open back up in the next couple of months.
So for sellers, if you're one of the sellers who's putting it out there, there's going to be fewer houses that you're competing against. And if with your buyer, fewer buyers to compete against. It's kind of a unique market that we're facing right now that we haven't seen in a while.
Yeah, it's quite interesting right now. Quite a fascinating time to be in the market. So very good. Any other thoughts as we wrap up today, Rick?
No, I think, like I said before, we're all in this together. Stay safe, stay healthy, keep a positive outlook. I think there's going to be some more surprises and bumps along the road. Interesting having gone through in this industry to the 2008 changes that happened on mortgage guidelines, from a credit score and a signature getting you a loan to a lot of documentation. We saw some changes that happened there. We're seeing a lot of changes. So So be patient. Don't feel picked on. It has nothing to do with individuals. It has to do with what's going on in the economy and
Sure.
things on a broader scale. So,
Why don't you give us what's your website or Facebook address if people wanted to come check you out, get in touch with you, ask you questions? Where can they find you?
yeah, so you can find us online at mygreenstreetmortgage.com. It's a mouthful, but they wanted too much for greenstreet.com. Couldn't fit that bill. So mygreenstreetmortgage.com, or you can find us on Facebook at just search for Green Street Mortgage.
Excellent. And you can find me at mybrghomes.com, or you can jump on my Facebook page, Mayan Burton Salt Lake Realtor, or Burton Realty Group on Facebook as well. So if you have questions, we'd love to help you out, answer any questions you might have, let you know what's going on, and help you get into that home that you're looking for with as little stress as possible in these crazy times.
Sounds good, Mayan.
So,
thanks for the time. Appreciate you.
Thanks, Rick. Appreciate you coming, and we'll wish you guys well.
Sounds good. Bye.
Bye-bye. All right, I paused that, so we should be.
I need to learn what my Facebook thing's at.